Hey everybody, this is Daniel. I have Agam and Dominic on the podcast. But anyway, Dominic, I guess just a little background on Dominic. I met you through Winter 23 Y Combinator, the batch, and it was an awesome experience for me. And honestly, like meeting you, I feel like it made me give a whole new respect to people like in the space of like taxes and like some of the benefits that are out there that honestly entrepreneurs don't know about. And people in fintech are just thinking about money movement from point A to point B, but there are other benefits out there that are kind of hidden. And I feel like you're like working in one of these like areas that I feel like not every entrepreneur is aware of. And honestly, it was great meeting you in the batch, and I feel like we really hit it off. And I actually learned way more than I realized about like what the government does to like help people. But yeah, I mean, just from that intro, I guess to start things off, like, well, first let's lay the groundwork. Like, what are you doing, and like, why are you working on that?
Yeah, no, that's super helpful, and I really appreciate Daniel and Agam inviting me here to get on today to have a discussion. We spent a lot of time together, Daniel. Last winter we were doing a lot of stuff, hanging out a bunch. So I'm super excited to reconnect with you guys here for the podcast. Now, in terms of what we're doing, right? So our company is SPRX. I founded it with my co-founder Mark. We do R&D credits using AI for corporations in the mid and the enterprise space. So a little bit of background, an R&D credit is an abbreviation for research and development tax credit. It's basically a government and statewide incentive to encourage people to do research here on the shores of the United States. It is the most lucrative and also the most audited tax credit in the US tax code and has been for about 40 years. So the reason that we're doing this, right, is I spent just about 5 years at the fifth largest public accounting firm doing R&D tax credits by hand in Excel spreadsheets. I left that position to found this company. My co-founder, Mark, he was at that same accounting firm. That's how we met. He was there for about 30 years as the global leader of credits and incentives. So he started this industry, kind of in that first wave of professionals in the mid to early 1990s that really established what an R&D credit was, and it worked with the government very closely throughout the early 2000s to establish kind of the legal procedures. And then when I started at Grant a number of years back, it was just kind of happenstance. I was put into this group. I was doing R&D credits by hand. And then when I left, what I realized was that like, hey, I had the skill sets, right? I have a background in CS as well as in accounting. So I'm a CPA and so is my co-founder. But with my background in CS, I figured, hey, why don't I just solve this terribly manual process, this thing that's predicated on professional services with technology myself? So that's what I started to do. It's Mark came over full time not long after I left, and this is kind of the problem we've been working at for a while.
Most people play it safe and they stay in like a big firm like you were in,
Sure.
right? Like, I would say 99% of people in that position wouldn't leave.
Sure. So there was a kind of a lot of factors in that. So I spent a lot of my career doing specialty credits. I also did a lot of traveling. I was on the road a lot, and because of that, I got exposure to a lot of different industry verticals for R&D credits and specialty credits. Now, I left in August 2020, but the pandemic started in earnest in like March 2020. So what happened is Grant Thornton pretty much grounded everybody. They were looking to, try and minimize costs and do some different things around, the tax technology group to begin with. So from my perspective, it was just the right timing. I had always kind of had the motivation and the interest to start a company to kind of be in the world of creating something rather than, I guess, creating something in a larger organization. I figured if I have the skills, it just happened to be the right time in my life. It happened to be the right time in our personal journey to do something like that. So I decided to shoot a shot. Yeah.
Okay, so you took the risk. You started the
Sure.
company. Did you do this before getting into Y Combinator, or was it?
Yeah, so that's interesting. So you mentioned we were the Winter 23 batch, but our dates, obviously, as I'm sure you may have picked up on, don't really line up exactly. So I left in August 2020, and my original dream was to build software for accounting firms. Um, and the problem with that, right, is the software that we created reduced the amount of time it took to do an R&D tax credit by about 80%. Now, at this time, it was just me building alone in my apartment here in Chicago. And I went and approached a couple of accounting firms, some friends I had made in the industry during my time there. And, my original vision was, hey, can I lease this back to my friends at the big firms and they'll be a pure SaaS plan? It'll be great. When you pitch an accounting firm partner on reducing time spent by 80%, they're interested, right? However, when you make that same pitch to, junior accountant, analyst, associate, whatever you want to call them, what they hear is you're reducing my billable hours by 80% and I'm going to lose my job. So what happened was I got to about 10 accounting firm customers over the course of about a year and a half into summer 2021. And what I learned was that the industry was going to be more about me undertaking change management procedures, right? Convincing people and accountants right in the space to say, hey, technology is good. Not even my technology, just technology as a whole beyond Excel is good. So at that time, I really started to think hard about, why am I selling to accounting firms? Why are we doing this particular thing? And what I realized was that, like, hey, we're kind of introducing an artificial middleman here. So it was around this time, summer 2021, that I heard that Mark was thinking about the firm, that he was maybe thinking about retiring. He was, unsure for where his career was at. So I called him up. Mark and I had a really lengthy number of discussions. And finally, I kind of said, hey, why don't you come over here and be my full-time co-founder? You and I can do this together. I have this piece of technology. And I think with your kind of industry expertise, we can really drive this thing in and revolutionize the space. So he came over in summer 2021. We spent probably the next year still trying to crack the nut of the accounting firms. We started going down market. We started trying to go up market. And at the end of the day, in summer 22, we just decided, hey, let's take our ball and go home, right? The customers that we had, we said, I'm sorry, we're not doing this for accounting firms anymore. We're not selling software to accounting firms. So we decided to just pivot and build our software for taxpayers, for the corporations themselves. And we went to market with that in fall 22, which is the same time we applied for YC.
What is R&D? Like, what actually is that? Can it be someone pulling apart a laptop, or is
Oh,
it?
yeah. So
Or
that's interesting. That's interesting. So the running joke here, right, at the SPRX shop is that almost anything is R&D, right? The key here is there's really 4 requirements, right? Requirement number 1 is there has to be a purpose for what you're doing, right? You have to be looking for something or trying to achieve something, right? You can't just sitting there and the apple clunks you on the head. That's not R&D, right? So step 1, you have to have a purpose. Step 2 is there has to be a technical uncertainty. And now technical uncertainty is very broad. There just has to be some form of, understanding towards a technical aspect. Hey, what is going to happen if we do this? To your point, Daniel, taking apart a laptop, if you take it apart and you want to modify it, maybe you don't know 100% with 100% certainty that a particular piece will fit or operate or the heat won't dissipate properly. There has to be technical uncertainty. Additionally, it has to be technical in nature, right? So it has to rely on the principles of a science, right? So computer science, material science, physical science, biology, chemistry, so on and so forth, right? So it's you can't really take R&D credit for like selling T-shirts in a retail shop because it's not predicated on science. And then finally, and perhaps most importantly, there has to be a demonstrable process of experimentation, right? So what that means is that you have to try stuff, and even if you try it and you get it right the first time, it still counts as R&D because you were trying and you were technically uncertain as to whether or not it would succeed. More often than not, obviously, R&D credits and R&D here in the United States goes through a very iterative process whereby, hey, let's say you're building a microchip, right? You try it with this number of resistors. Oh, it didn't work. Okay. You try it with this number. Okay, well, that number of resistors worked, but it's too hot or it's too power hungry, and so on and so forth. And you can apply that to nearly any industry here in the US to say, for example, if you're paving roads, right? If you're using gravel and asphalt to pave roads in Texas, you have to figure out, hey, is this blend of gravel going to withstand the sun, the heat, the wear and tear from the weight of the cars on a Texas road versus the weight of the cars in Maine, for example? And are those 2 gravel blends going to have to be different? And are they going to have to be applied differently? And then so on and so forth. So you can see the definition is broad, which leads, I'm sure, to the question of like, hey, how do you claim an R&D credit then? And the key really is predicated on documenting the study, documenting the credit, saying, hey, here is contemporaneous documentation that was created during this process, during this iterative process of experimentation that demonstrates that we had a purpose, there was a technical uncertainty, and it was predicated on a particular science. And that's really how the whole process goes these days.
So just to understand, like people can get into hot water if they don't understand like exactly what that is. So working with someone like you could kind of determine if it's R&D. An example for me, I don't know if it's R&D, is like you buy a Shopify or a Weebly account and you create a website. Like that to me doesn't sound like R&D, but maybe it is. Like I don't know. I mean, there's so many of those cases like that where I think at least talking
Sure.
to your team would give insight, right? Like you kind of
Yeah.
say yes or no. Yeah.
Absolutely. So one thing when you're working with SPRX, right? We obviously have technology. We can talk about all that later, but at its crux, it's all about figuring out what is or isn't qualified for R&D tax credits. Now, to your example, creating a Shopify account and putting some things up on a Shopify store in and of itself may not qualify. But however, how many times have you created a Shopify account and done no customization, zero interface? You start the account and you just put something up there, picture up there, and you start selling things right away. Almost never, right? The reality is you're going to create the Shopify account. You're going to want to, customize a theme. You're going to have to go in and you might be doing your own CSS. You might be doing your own HTML. You might be getting plugins and figuring out how the pipeline from the plugin flows into the accounting system or the shipping and billing system up through the actual front end. So when you take a look at the reality of a process, you can see that all of a sudden there's a lot of technical uncertainty there, right? If I was to start open a Shopify account now, I probably wouldn't be able to start selling products for a month, maybe two, depending on how much customization I needed.
Got it. You had a question, Agam?
Yeah, so I just wanted to know, like, on what stage does SPRX come in the picture while they are ideating towards a new innovation or start working towards R&D, or is it after they are in the project, or only when they file their taxes? And that is it, like, I just want to understand that.
Yeah, no, that's a really good question. So we kind of come into the process when it's time to claim the R&D credit. So the credit operates in two ways, right? One way is if you're a startup company. Now, a startup company is by the IRS defined as a company that has been around for 5 years or less or has made less than $5 million. Now, if that's the case, the credit can be applied against payroll taxes. So in all of these cases, you have to be expending money, right? So for example, it's not Agam, if you were sitting in your apartment and saying, hey, I have this really great idea. Well, you can't really take a lot of R&D credits for a really great idea, right? However, if you said, hey, I have this really great idea and I'm going to go buy, $20,000, $30,000, $100,000 of prototype materials, right? I'm, build a nuclear reactor here, a fusion reactor here in my apartment for whatever reason, right? And you bought a bunch of materials. Well, then all of a sudden, then you're starting to have some costs. You're starting to spend money on R&D, which means you are entitled to a tax credit. Now, again, if you're a startup company, it's unlikely that you're building the theoretical fusion reactor here and selling it at a profit right away, or selling it in a state that you would have a taxable income. So on the one end, for startup companies, you can take that tax against payroll taxes. So if you're paying, 4 or 5 employees, you have to pay a certain amount of money to the federal government as payroll tax. You can take the credit and reduce that amount. Now, on the other side of that coin, if a company has been around 5 years or longer and has made more than $5 million, or has made more than $5 million rather, you can take that tax against income tax. Now, that's one of the primary ways United States companies avoid paying federal and state income tax. Companies like Amazon, Microsoft take tremendously large R&D tax credits every year to drastically reduce, or in some cases eliminate, the income tax that they have to pay on a particular tax return. So we come into the process when it's time to start understanding the R&D tax credit position, right? For us at SPRX specifically, right, we typically work with clients that are doing, $10 million plus in revenue. They're coming through, they're seeing some real meaningful traction, they're seeing meaningful revenue, and they're likely starting to get into a profitable, if not taxable position. And for us, that's kind of our market, our segment. We get in there, we can help them file the returns, help them rather file the returns with the R&D tax credit on it, and advise them in certain cases how to maximize that credit in years going forward. But it's certainly in the current year, advise them on how to claim the most credit that they're entitled to.
Yeah, so all the customers which are enrolled with SPRX, do you have any numbers to share that what kind of percentage they were getting the claims for previously when they joined you, and after they joined you, what are the benefits they got, how they use the technology?
Yeah, absolutely. So our taxpayers come in and they are, they really represent the scale of various, we'll call tech excitement, right? Most of our customers are manufacturing companies. 55% of the R&D credits claimed in the US are by manufacturing companies. I think a lot of people maybe think that it's all tech companies, and it's really not. It's mostly manufacturing companies. So with that in mind, our customers are kind of ranging the scale. On the one end of the scale, we get our customers, they get into the software, they link up their payroll, they link up their GL, via API, we pull in all the information, they input, any contemporaneous documents they have. This is, things like emails, meeting minutes, PDFs, PowerPoints, so on and so forth about the project. And then our software kind of takes over, does the rest, and then we send it over, back to the taxpayer to validate. Now, on the other end of that spectrum, you might have a CFO of a manufacturing company who said, hey, we worked with Deloitte last year. Here is the spreadsheet we gave to Deloitte. Well, they upload that into our software the same way, but of course, it's a little bit less automated, right? They might have to spend a little bit more time, but they're still seeing a drastic time savings. On average, we found that it takes people who work with SPRX about 5 to 7 business days to complete an R&D tax credit study once they have their data. All in, it takes about 3 weeks from the time we sign a contract, sign an agreement, through the time that the taxpayer has their forms and their final report, which is very rare in the industry. Typically, accounting firms will give them the numbers and then give them the report like 7 to 9 months later, which is just, it's just absurd, right? You have the numbers, but you don't have the substantiation of it. So that's kind of how our customers interact with it. And in terms of what we'll call increased success, we have seen on average, our customers see between 12 and 15% additional credit compared to an accounting firm provider, based purely on the fact that we can analyze drastically more data, right? A number of our clients before had to do a statistical sample because they had so many cost centers that their accountant just couldn't analyze it. Well, for us, we're using all AI, all machine learning stuff. So for us, we can just jam through, millions, tens of millions of rows of information and get to the right answer. Now, the absolute best one we ever did, we actually found 10 times more credit because the old provider just said, hey, we can't go through your supply costs. It's too drastic, too vast, and it will take too much time for the amount that you guys want to pay us. So for us, we said, yeah, pay us that amount. We'll do supply costs. And they were just completely, unaware of how that could be. And we said, we go through your GL, we go through your transaction list line by line using technology. And it just blew them away. 10 times more credit. They went from, I think they went from like $100,000 credit up to almost over $1 million at the federal level. So they were huge tax savings. They're really excited about it.
So the way that, now that I'm understanding your business more as you're talking through it, someone has say they're building like a Linux device, and
sure.
It does something for people, it detects if someone's near like a water fountain.
Sure.
And they're doing R&D around that, and they sell these things, millions and millions of these across the United States. What you do is you actually gather the hardware invoices, you gather teams working, you gather emails and documentation, pour it all into this huge repository, and then you have AI scan it at a deep level that a human normally would do manually, and then you'd have
sure.
that person doing that. Is that the right way to think about what you guys are doing?
Yeah, that is materially accurate from an execution perspective. Now, the credit is made up of 4 primary drivers. There's the wage piece, so your payroll costs. How much time, Daniel, you spend, figuring out how to build this device? How much time do you spend of your time doing R&D credit qualified activities, right? So that's the wage piece. So for that, we'll gather, payroll data, right? How much did this person get paid for the year? We're able to predict using AI how much time they spent doing R&D credit qualified activities. Now, number 2, right, is supply costs. So to your example earlier, you must have bought a tremendous number of boards, probably breadboards initially, and then PCBs. You had to figure out the circuitry. You had to buy a ton of prototype materials to build these devices. And up until the point of commercial, production, up until the point that you are selling these commercially and the entirety of the uncertainty has been eliminated, it qualifies for R&D from a supply cost state. Now, third is any contractors. So for this device, you likely had to pay third-party contractors in the US to either consult on it, or more accurately for this type of device, you had to pay contractors for stress testing, like Underwriters Laboratory, to give it a certification to say, hey, this is UL certified. They had to do certain tests on it. They had to undertake a certain procedure to get this done, all qualified for R&D. And then finally, any computer costs, so AWS style costs, server side costs, cloud computing that you had for the device's production. So you might say, hey, on device, it does these things, but also we had to create, a backend, it's AWS hosted, the server costs involved with creating and maintaining that backend, again, up until the point of commercial viability, all qualified for R&D. So Daniel, to your point, we gather, the general ledger data for supplies, for contractors, we gather your payroll data for your wages, and then of course, again, the GL for your server costs, your computer costs. Now, additionally, some companies that we've worked with like to give us like their blanket transaction data. So, hey, here is the money that went in, here's the money that went out of our bank account. Now that, as you can imagine, could be, millions of lines of information for a company at scale. And it's the same procedure for us, right? It's the AI that goes through, analyzes these costs, picks out the ones that are qualified for R&D, and then assesses how much of that cost is going to be qualified, and then continues the computation from there.
I mean, this is like an arduous process if there wasn't like AI involved, right? Like that was just what it was like 10 years ago. It was just a people-driven service business, right? Like it was.
That's what it was still for everybody but SPRX.
Got it. Okay, so you guys are really changing the game with like just using AI to like analyze everything at a fast rate.
Yeah, absolutely. I always tell people the math, right? The actual math to compute the number is not very challenging, right? It's addition, subtraction, multiplication, right? And division. The math is not the hard part. The hard part is figuring out the costs, figuring out what goes into those numbers, and then further substantiating and analyzing documentation to say, hey, you said you had 100,000 in supply costs. How do you prove that that's R&D? Okay, well, here's the invoice. Here's this invoice. Here's this date. Here's this person that worked on this project, and this person's an engineer, and so on and so forth. So everybody else in the industry right now, especially those people that we're competing against, the accounting firms that have been around for, doing R&D credits for 40 years, but have likely been around for over 100, they're still doing it manually, right? They are sending armies of junior accountants, guys like me right out of school, to comb through ledgers and do statistical samples to figure out how to make sense of all these costs.
And is there a limitation on the R&D like credit that you can get? Because say I spend, I don't know, say you raise $100 million for this, fancy water fountain, and you build the coolest new water fountain, and everybody wants to use it. Like you just burned $100 million, and you're starting to get some profit now. Like people starting to buy the product. Like, how much credit can you like get? Is it like unlimited? Like, is the incentive to like spend? Of course, you want the product to be successful, but also like if there's a huge benefit in getting the tax credit, you will risk more because you get something back. Like, is there a cap?
Yeah, so there's no cap on the R&D credit itself, right? Again, it's a cap on, at this point, call it taxable income, right? So let's say you're getting a little bit of traction, you can use some of the credit to offset it. But the great thing here is that the credit, it can carry forward as well as look backwards. So in a particular year, let's say you spent all these years building this thing. Let's say you spent the past 4 years building this, right? And let's say this is the first year that you're starting to have commercial viability. Well, you can go back in time and say, hey, I want to claim credits for 19, 20, 21, and 22. Go retroactive. You can go back 4 years, claim these credits, and then use that proactively and carry forward, I believe, up to 20 years. So you can bank, if you spend $100 million, you can bank R&D credits every year, kind of ad nauseum, so that let's say, you spent $100 million, you're finally starting to get some traction. Say in the first year, you've made $1 million in taxable income. Well, you'll have certainly enough R&D credit to offset that. But let's say the next year you made 50 mil in taxable income, you'll probably still have enough to offset that too. Now, it is important to note that the credit is not, it's not one for one. It's not like you spend 100 million, you get 100 million, right? You get approximately, and this can vary based on circumstances, you get approximately 15% at the federal level, and then another maybe 10 to 12% at the state level, depending on where your operations are at. So you can be looking at 20 to 30% of the particular cost. So if you spend 100 million, you might get 30 million tax credit, which is a pretty good deal.
Interesting. So I guess in the world of AI, like what do you see like long term for like your product? Like right now you probably have people involved, they're overseeing the AI, you're building with the AI, you have a product team, I'm sure. Like, what is the big vision for like what you're building? Like, what do you see it becoming? Like
Yeah,
long.
absolutely. So R&D for us is it's a great market. It is, like I said, one of the largest tax credits, if not the largest. Now, what we also realize is that there are hundreds of specialty business incentives, right? R&D is not the only thing that people are using to get credit on their tax returns, right? You have new energy incentives with infrastructure bill that just got signed and got passed a couple of months back. But you also have old school incentive, work opportunity, enterprise zones, economic development. So from our side, what we want to do is say, hey, let's nail R&D, but then let's truly become the TurboTax of specialty business credits, right? Can we say, hey, let us plug into your financial data, let us identify 25 tax credits, let us compute them automatically. You take a look, you validate that the fact pattern makes sense, and all of a sudden you're not using an accounting firm to do these specialty consulting anymore. All of a sudden your bandwidth is freed up for something else. You can apply the funds. Really, just a way for businesses to continue leveraging on the capital that they've expended to do these initiatives, whether it's R&D, whether it's capital purchases, building requirements, energy infrastructure, and other types of investments.
Oh, interesting. So you're going to become like a, there's TurboTax to do taxes. There's QuickBooks to like do your accounting. You're going to become like the credit product for like the world, or at least the United States.
That's the hope. Well, the hope is the world, right? The entire world has very generous R&D incentives. Some honestly more generous than the United States. United Kingdom, Australia, Canada, they all have very similar R&D credits to the U.S. They were modeled off of our laws here, so it's kind of it's not 1-to-1, but maybe it's 0.75 to 1, so to speak, in terms of math. Now, if you look at countries like Greece and Ireland and Italy, those are countries that are trying to really incentivize people to come there. So oftentimes they'll give you 200% of what you spend, 250% of what you spend to try and encourage people to domesticate their business in those countries. So, the world is really trying to open its eyes up, saying, hey, these tech companies, these companies doing R&D, in the manufacturing space, in the textile space, in the the pharma space, the bio space, things like that. We want people to bring manufacturing to Greece. And what can we do with that? Well, we can incentivize manufacturers who are doing this research with a big tax credit and a big tax break. And that's how I think a lot of countries are looking to be competitive in the tax landscape going forward.
So, okay, so a country like is incentivizing companies. I mean, it could be bad if you're over. You said someone can get 200%, like what they put in.
That's right. Yeah.
That's crazy. So you could like spend $100 million creating a water fountain and then get $200 million back somehow in tax credit.
Yeah, the theory of it is similar to that, right? Of course, let's say you spend 100 mil. Let's say in the US you'd get 30 mil. Maybe in another country you might get 60 or so. Now, even so, to your point, there could be some downside to that, right? But I think right now, what people are trying to do is encourage research to happen in countries that have historically not had a strong research background, especially kind of in the Mediterranean. We're seeing a lot of activity in Africa. We're seeing a lot of activity in the Middle East as well. And of course, East Asia with all the manufacturing type styles that happen over there. Now, it's kind of a balancing act, right? At this time, the United States is currently the leader kind of in R&D tax credits, and often is on the forefront of tax incentives, especially tax incentives at least. Now, how it plays out over the next 5 to 10 years globally is kind of anybody's guess. My estimation is that just with the globalization of our economy and just kind of the breaking down of barriers across many countries in the world, is that we're going to see R&D become a very competitive point here in the US to say, hey, we need to incentivize companies more. Oftentimes, the U.S. is actually quoted in like the bottom quartile in terms of incentivization for R&D at the tax level. Now, obviously, the most activity happens here, so they don't have a whole ton of excitement or incentive to jump up to the top quartile or maybe even the top spot. But if that starts to shift, you might see some real kind of tectonic adjustments here in the U.S.
And just to understand tax credits, like it's not actual money put into your account. It's
Right.
different.
Yeah. So it's so for example, when you do your personal taxes, right, you put in some information, and at the end on one of the lines it says, hey, here's your taxable income, and then you do some multiplication, and then it's, hey, here's how the amount of tax that you owe, or in some cases the amount of tax you're going to get refunded. Now, for the R&D credit, it's the same thing for a corporation, just at a much larger scale, right? Now, what that means is that, hey, if a corporation does all this math, they get to a number and say, hey, you owe, $20 million in taxes to the government. Well, that's when you start lopping off those tax credits, saying, no, I might owe $20 million, but my R&D credit, I got a $14 million R&D credit. So all of a sudden you go from 20 down to 6, right? You might say, oh, well, I also have a $2 million work opportunity credit. Okay, now you're down to 2, or down to 4 rather. To go, I actually, I invested in this energy project, and our buildings are all LEED certified now, and we have solar on all the buildings. So you get, $2.5 million credit for that. Now all of a sudden you went from 20 owed to the government down to 1.5, and you can keep doing that and chipping away at it at the taxable level. Now, to the extent that you do go over, right, if you reduce your tax bill, under 0, what happens is you can carry the remainder of those credits forward. Now, I'm just talking about R&D specifically now, but if you say, hey, we had $1 million of tax and we had a $2 million R&D credit, well, sure, the first $1 million of the R&D credit wipes it out, but the second $1 million can be carried forward again up to 20 years. So next year, let's say you have a bigger tax bill and you need a little extra juice, you can just use that extra mil from last year to get rid of some more tax.
Got it. Oh, so it's super interesting.
Yeah. So for corporations, right, for people that are in a taxable position year over year, it's just as good as dollars in the bank, right? It's dollar for dollars that are not leaving your bank. Kind of the adage of, a dollar saved is the dollar earned. In this case, a dollar not paid to the government in taxes, certainly worth more than $1, right?
Yeah, just to understand about the market, and as you said, like more than 50% of your customers are manufacturing companies. So do they file only for the products they built on the basis of research, or is it about the process optimization as well? I see that, in manufacturing industry, they do a lot of process optimization. They do research on that, how you can do certain things better. Let's say Tesla building the gigafactories. Do they even claim for those kind of projects as well?
Oh yeah, absolutely. It is. It's completely available for newer, improved products, but additionally newer, improved processes or techniques, right? So something that we see a lot in these manufacturing companies is, they'll go through and say, hey, we have this product. We took an R&D credit when we first created it. Then we took another credit on that same type of product, right? When we improved it, Gen 2 of the product, right? And now, hey, we want to build Gen 3, but to do that, we're going to have to reorganize our whole factory. We have to completely, gut the line and change, this extruder and this stamper has to be over here, right? And all of that is qualified for R&D. So process improvement, technique improvement, absolutely qualified. Of course, at the improvement level, as I mentioned, but also at the ideation level. So not just coming up with the product, coming up with the how of the product, not necessarily just the physical thing.
Do they apply like 6 months in? Do they apply like annually, every 5 years? Like, what's the process?
Yeah, so that's a great question. I think that's a question a lot of people have is, hey, when do I actually get my credit? So you can apply, anytime during the year. And I say apply, it's a pretty loose term because there is no application. Just filing the form, you're automatically approved from the government to get the credit. So it's not like the government, you have to put an application and the government says, yeah, okay, you're good. You put the form in and, it's treated as if you get the credit. Now, of course, it can be examined later, right? And you have to get an audit and so on and so forth. And of course, at SPRX, right, we back up all of our claims. If you get audited, we'll come and help you out, type of thing. But on that note, you would likely apply for it annually, right? Any company, whether it's YC or any other, Microsoft, Apple, whatever, you're going to be applying annually. You're going to be filling out these forms annually. In theory, you could start to do stuff in the middle of the year, right? If you're saying, hey, call it June 2024. I want to start taking a look at where my R&D credit is right now, and then figuring out what I can do to either increase it or keep it consistent throughout the rest of this year, right? So you can start to do some of that stuff, or you might say, hey, I just paid, we've been head down, we've just been in total grind mode here. We haven't filed for an R&D credit in 3 years, and let's say it's 2026 and you say, hey, I want to go back to 23. That's fine. Great. Let's start that process anytime during that tax year. Go back, claim the credits for 23, 24, 25. And then, of course, once 26 closes up from a tax perspective, we can claim that credit for you as well. So it's really flexible as to when we actually get the credits completed. It's totally up to the business cycle, right? We don't want to foist upon our customers or anybody in the space, unnecessary constraints, right?
Another question, I guess this is a question about like the AI side of things, and you're an engineer, like you understand a lot about engineering. There's a lot of debate about like how far AI can help in the technical side of things with like monetary, movement of money and
Sure.
whatnot. And, people talk about hallucinations and all these other
Yeah.
things that are kind of like risk bearing in that way. Like, where do you see the most like, and this is just a question that's kind of open ended. Where do you see the most like innovation happening in the fintech space that you think you're going to leverage like long term, or you're leveraging now?
Yeah.
As in the AI space specifically.
Yeah, absolutely. So I think there's a couple of different ways that people talk about AI. I think when people say AI today, what they're talking about really is generative AI, LLM, chat GPTification of it all, right? So we, of course, we use some LLM, some custom stuff that we kind of fine tuned here in house. But additionally, we're doing old school ML stuff, right? We're doing regression stuff. We're doing tree analysis, cluster analysis, stuff like that on some of the predictions, on a number of the predictions that we're doing on the side of prospective AI on a macro perspective, right? I think that if we take a look at where it's going to help in the fintech space at large, I think it's going to be a game changer for data analysis, right? If you look at that though, I mean, regression analysis, which I guess you can kind of consider as like the lowest form of AI, so to speak, predictive regression, it's been around for a really long time, right? I think where we're seeing things go now with the generative space, which is, of course, we're leveraging Gen AI for a lot of different things here internally, especially on the reporting side and the data analysis side, and certainly on the grouping side, right? Of understanding the context behind transactions, behind certain line items. I think that's really where we're going to drive a lot of innovation with fintech, right? The context and the understanding that these large language models have today, and I mean, quite frankly, will have in the next, I don't even have to say 5 years, in the next 18 months, 24 months, I think is going to grow exponentially. And the things that the models can understand with a little bit of fine tuning, with a little bit of prompting and context management, and various strategies on that front. And of course, protections against hallucination, protections against misuse, various high degree of specificity on task, which is something that we believe in at SPRX. I think that you're going to see a huge shift in the amount of data created, and then of course the amount of data that's able to be analyzed.
Know like what's the roadmap forward? What I have 5 year goals and what I'm looking towards where the industry is gonna be like. Are there more competitors coming in? Like what is landscape you are visualizing right now in near future?
Yeah, absolutely. So, I think there's a couple of questions there. In terms of right now competitors, we don't have anybody competing with us in the mid-market of the enterprise space. And I think the reason is because it's, everybody thinks, hey, you pair up some pretty smart tech guys and you pair up some pretty smart accounting guys and they can probably come up with something good, right? I think what we know and what we've learned, I think what everyone's starting to appreciate is that there's a really big gully between those two things, right? And you really have to have the right team building the right product. Now, in terms of competition, it's always a possibility, and I would be, remiss to say we'll never have any competition in our space. I think that what we've been doing, what we've been executing on, has given us such a drastic head start that that we're in a great position. Now, what's next for us, right? Our focus, in the short term, is nailing this R&D thing, right? Is getting out there and demonstrating to people who are claiming a credit currently, or who have maybe never claimed a credit, hey, there is a better way than hiring an army of CPAs to show up at your office or to suck up all your engineering time just to get this particular tax credit, right? There's a better way, and that way is through technology, through AI, and through SPRX. Now, in terms of what's next for us on a product side, like I mentioned, we want to start to add additional credits here. We want to start making the R&D credit process even easier than it already is, right? So we've added, one of the newest things we added just a couple of weeks back is a chat style validation, right? So now when you come through, you complete a study with us, you can send an AI agent based chat to your engineering team that basically says, hey, here are the conclusions SPRX has come to. Here's the contextualization around those conclusions. Does this make sense? Oh yeah, this makes sense. No, this doesn't make sense. And because the world has become so accepting of something like Chat GPT, right, where they're talking to, they think somebody on the other side, it seems like somebody, but in reality, it's an AI agent. We've seen a huge acceptance of this in our market. One of our customers told me on Monday, hey, what used to take our engineers 45 minutes, we had 60 engineers, they would sit each of them in a meeting for 45 minutes with the accounting from last year. It took them on average 4 minutes to interact with your validation AI, right? Your validation chat. And they said that's such a time savings that's worth, more than we paid in the credit. And of course we said, shoot, we should have billed them more. But point being is we really want to find a way to eliminate even more barriers on the R&D space, because we're really passionate about that space. We're really passionate about taking what we've learned from R&D and applying it to all these other tax credits.
I guess last question for you. What would you say was like your best, you came to Silicon Valley, you spent 3 months here, lived here. Like, what was the thing that you took away, the biggest, like most insightful thing, after being in Silicon Valley with some of the smartest people around? Like, what was it?
Well, so that's interesting. And I'm really happy actually that you put it that way, right? Because, Mark and I, we had never been in this world before. We worked in accounting, worked in professional services. We'd certainly never been in venture-backed companies, certainly not in tech, right? So I think coming in to YC last January, I certainly felt, a little bit of, hey, do I belong with this group of people? When you look at, Daniel, our class even, but, when you look at the alumni, that have come through the program, you think, geez, look at these guys. Sam Altman is the guy at OpenAI, right? You have Michael Seibel and Justin Kahn, Parker Conrad, all these great people who have gone through and created these crazy companies. And you think to yourself, like, hey, do I belong in this cohort of people? And I think one of the great things that our partners, Michael, Tom, Rich, Nicholas, I think one of the great things that they did was they really drilled it into our heads, my head specifically, that, you guys are part of this, right? You earned your spot here, right? You are the kind of 007 version of yourself. You guys are kind of the badass version of yourself, of like, hey, this is something that you guys can do. So I think one of the biggest takeaways that I had from the YC batch, from moving out to Silicon Valley, is that as a professional, whether you're a founder, whether you're a CEO, whether you're a builder, whatever it is, that you are capable of substantially more than you think you are. And once you realize what you're capable of, you're likely even more capable than that, right? So once you think, hey, this is the most I could do, you probably got another 20 or 30% in the tank. And once you, figure out that 20 or 30%, you probably got another 10% in the tank, right? So that was my biggest learning, my biggest takeaway, and something that has materially affected, the kind of the arc of my life.
Yeah, I mean, that's actually a really great ending to the podcast. I feel like I really resonate with that. I feel like, being through that same batch, I felt the same way about these people, and them pushing that hard on you and believing in you. It's a really great, honestly, feeling, and it pushes you to like build a really great company in it. And that's why a lot of the Y Combinator companies like get so far, is because of that optimism from the YC community.
And that's another great way to put it, the community, right? The kind of closest that we all created in our Winter 23 batch. I'm still, connected to a lot of them. Obviously, Daniel, we're still connected pretty well. It's just, kind of the brotherhood you create with everybody in your batch, in your cohort. And then that extends so much further beyond just the 200 companies that we interacted with over the course of the batch. It extends to, when we were out there for the reunion, I had dinner at somebody's house that was in like YC 2006, right? And it's just, we had never met before, but it was something where, hey, I went through this, you went through this. We kind of, real recognizes real, so to speak. And I really appreciated that. And I have enjoyed tremendously getting to know all of our batchmates, but you guys specifically have been a real bright spot in what we're doing.
Awesome. Well, thank you so much, Dominic, for being on the podcast. This was great. And